So hi, so hi, guys, welcome back to my channel once again. And today we'll be looking at BTC and what we should be expecting. I know a lot of people are looking at what should they be expecting in BTC, what is really happening. And for the past few days now, BTC has been ranging within this level. So the main question on people's mind is this the end of the bull market? Are we starting a bear market? Well, there are some metrics which you all can use to check this, and they are very, very important. We'll go in, we'll go to that shortly, and just make sure you watch this video to the end. I'll try my best to make it very short and sharp and straight to the point. So first thing first, whenever I get this kind of range within this level and I don't know what is really happening, what I do is I try my best to use some indicators to check what is really happening. Now, the first and the most important and my favorite indicator which I use is the Ichimoku cloud. So if you look at this very well, the Ichimoku cloud, I want to go to the settings quickly. So the settings here, what you have here is 926 52 26. This settings is a default settings majorly for forex setup, which is telling you the market opens Sunday night and it closes Friday night. So these settings, you can use it for any market. For any market, you can use it for crypto, you can use it for commodity, you can use it for stocks, and as well for forex. So now let's look at what is happening. So first of all, what I'm going to do here is I'm going to expand this. Now you can see, now we want to look at the price in question. You can see back from here, October last year, you can see how price after it broke out above this cloud here, it stayed above the cloud and continued to maintain that level until it's below the cloud. Now, a lot of metrics here. We have the Chico span, which is this. We have this red EMA here, which is Kijun. Now we have this other one here is the blue Tenken, and we have the future cloud. Now there's some setups which you need to keep an eye on if you want to see the change in trend. Now, what are those setups? When you see all the metrics, they are below the cloud and the price is also below the cloud, you need to be very, very careful. Now, at this point, there are some things you need to keep an eye on. First of all, like I said earlier, I said price has been ranging within this level down to this. We got a lot of rejection with price closed higher instead of closing lower to this level. So whenever you get price holding this level, the first thing you need to pay attention to is the flat Kijun. The flat Kijun is telling you, when you see the Kijun here, which the red EM is flat, and the Tenken is going very far away from the Kijun, it's telling you that the price is at this equilibrium. So normally the Ichimoku wants price to be at equilibrium, to be at a one-way balance setup. So now what we're getting now, even when the Tenken is pushing down, you can see the Kijun is going totally flat. Now what we call this is the TK disequilibrium or the C clamp. Now, whenever we get this, there is high probability we'll get a push back to the upside, which is what we call the Kijun bounce. So it is telling you we'll likely get a push back to the upside. But take note of that. Just because we're getting a push back to the upside doesn't really mean that we're back in the bull market or we're going to see more upside. What we want to see is price needs to go above this future cloud and all metrics will flip back to the bullish side. You can see it's very, very obvious here. You can see this. Let me move down. You can see since when we got this from this red cloud to the green cloud, you can see it to this level. So when we got to this level, you can see how we twisted and we are all seeing the red cloud. So we need to be very careful on what we trade. So, and again, let's go to the weekly time frame. There's something like that I want to point out there. In one of my videos, I talked about how you can trade the bearish engulfing candlestick. Now, the bearish engulfing candlestick, that's what we had here. And the next candlestick opened and closed way below this. Now, this next candlestick, it is very, very important. If the next candlestick closes below where this closed, you know, the bearish red candlestick, it opens at the top and closes at the bottom. What we'll have here is green and it's yet to close. It will close the next 6 hours. So if this goes back down and closes way below it, then we're going to get more push to the downside. So we need to be very careful here. We want to see a nice close on the weekly time frame, which is very important. So, and back to the 4 hours time frame. One thing I love doing is I deal with chart patterns, and for you to get a chart pattern, you must understand how your support and resistance work. So if you don't understand how the support and resistance level work, you might be mistaken some other setup, maybe the bullish setup or the bearish setup. So now let's look at what I've been looking at here. So we have this down sloping resistance here, and we also have this up sloping resistance, which is very, very important for us to keep an eye on. Very, very important for us to keep an eye on. Now you can see what is happening here. We have this 1, 2, 3, 4, 5. So this is very, very important. Very, very important. Now, a symmetric triangle is a chart pattern which you cannot actually predict where it would break out from. You can see a symmetric triangle which will be a bullish continuation chart pattern, or you can see a symmetric triangle which will be a bearish continuation chart pattern or a bearish reversal chart pattern. Now, we need to be very careful here. If the body of the candlestick closes below this up sloping support, then we're going to get more push to the downside. And if the price move back up and continue to lean on the downsloping resistance, if it continues to lean on the downsloping resistance, okay, so now when we get price push back to the upside and price continue to lean at that level for too long, then we're going to get a break to the upside. Now, guys, you need to understand this. For you to know a bigger move in the market, starts with the lower time frame. Whatever big move you are getting in the market, it all started with the lower time frame. Now let's go down to the lower time frame to see what is happening. So what I'm seeing here that is happening, I can say that we're getting like head and shoulder, inverted head and shoulder chart pattern, which is yet to be confirmed. So whenever you see me drop any chart pattern and you get a fake out and it drops back, it's not confirmed. What you need to look out for is the body of the candlestick must violate this 1, 2, 3, 4. You can see this is just a rejection week. So the body of the candlestick must close and stay above this level. So now let's look at this very well from here now. Let's look at this very well. So now we have the head here. We have the left shoulder here, and we have the right shoulder here. So it doesn't mean how small or big the left or the right shoulder is. And a down sloping resistance. Down sloping resistance can also be called the neckline, which is very important for the body of the candlestick to close and stay above. So I think a lot of coins are having this kind of setup. Let me look at ETH prep on FTX. Okay. Okay. I cannot say this is head and shoulder. We'll go down to lower time frame. So what I can say here, you can call this cup and handle chart pattern around here, cup and handle chart pattern. So why do I call it cup and handle chart pattern? Is because this from here round to this place has a U curved shape, not a pointed shape. And the handle also should have a curved shape. So we can draw something like this, and also draw the same thing around here. So this is what we need to keep an eye on. And take note of that. Just because you see me, I'm drawing cup and handle chart pattern, doesn't mean we're going to get more upside. We're only going to get that upside when the body of the candlestick closes above this psychological horizontal level, which is this 1, 2, 3, 4. So once this move closer to this level and closes above this, which is the body of the candlestick, then we'll get more upside. It is very important you guys understand this. And the more you understand how this works, the more it helps you in other markets like Forex and the rest. It is very important you guys understand how levels work. So let's go back to BTC. One last thing which I need to explain. One last thing I need to explain here on the daily time frame. So like I said, we need to be very careful here. We need to be very, very careful. Okay, so let me delete this and we'll talk about one more indicator which I've been looking at, and so far so good. It has not really given any sign of going back to the upside or like going long, or it's only giving you an opportunity to short the market. So let's go to 4 hours time frame. So in this 4 hours time frame, I'm going to use the Williams alligator. Now the Williams alligator, it consists of 3 different EMAs, and these 3 different EMAs, one is very fast, one okay, we have the teeth, the jaw, and okay, the teeth, the jaw, and the lips. Yeah, the teeth, the jaw, and the lips. So one is 5, 8, and Let's see. Okay. Yeah, this is it. The teeth, the jaw, and the lips. So we have, okay, 5, 8, and 13. So we don't need the 3. So 5, 8, and 13. So from here we had so when we had this bearish cross to the downside, um you can see how the 3 EMAs are wide open. So whenever you see the 3 EMAs, they are wide open and there are a lot of space in between them, it's telling you the shorts are still widely open, and whatever pullback will get would trigger a short back to the downside. Now take note of this the daily time frame, and the daily candlestick will close this night, 11:59, and the weekly candlestick will also close this night, 11:59. So majorly you can see what happened here. You can see from here when we got this bullish cross. Once the green crosses the red and the blue from below to the upside, you can see how it has opened and they continue to move up until we got to this level. We got that break to the downside. You can see they did not spread while going down. They only twisted around here and continued moving back up. Now look at what happened here. We got the pullback. So if this actually pulls back here and we don't get that turn with the green EMA trying to cross the two to the upside, we might not get that long strong position to the upside. So we need to be very, very careful at this point until the trend change, until that we'll get a flip from this downside to the upside. Then we'll get new prices coming in. Or the most important thing now is for us to keep an eye on the levels of resistance, the levels of support, where we'll likely get a bounce and a pullback back down, or a bounce and a breakout. So these are very, very important levels we need to keep an eye on. So I think this is just what we should make sure you will look out for as we're about to start a new week, so that we don't enter into a losing trade and continue to hold it for a very long time. So guys, I'll try my best to continue to update BTC chat on the Signal group so that everyone will know what next to do. So happy trading, guys, and enjoy the rest of your evening.